morning. You're watching The Market right here in ET Now with me, Aisha Faridi, Nikunj Dalmia, Vandabash in the studios. And just the intraday low yesterday, while it wasn't a very wide range that the markets clocked yesterday, a very, very narrow band from the highs to the lows. But nonetheless, we got pretty close to even reaching that 19,600. Just about defended that level, and at the top we had that 19,700 plus level coming in. Having said that, the top drags continue to be the entire technology basket. Infosys led the decline yesterday. There was non-performance coming in from Reliance Industries as well. But yes, that got sort of balanced and a bit of a seesaw there from ICICI Bank and Bajaj Finance on the other end. So pretty volatile a day, but again, on closing, we were absolutely flat for ourselves.
See, markets are getting tired, Aisha, to put it very simply. There are times you have trend in the market. The trend could be strong, the trend could be weak. There is momentum, the word momentum can be addressed with markets on the upside and also on the downside. So what appeared like a reversal, let's say, late last week or middle of last week, that has not translated into any kind of a snowball effect. So markets are simply tired. They are marking time. You are seeing some give and take which currently is happening. Banks which were supposed to lead the market action, they've not obliged. Reliance was never in the race. So the Nifty right now is bereft of leadership. There is a time-wise and a price-wise correction which has kicked in some of the railway, defense and some of the power stocks. So this market is simply marking time, waiting for the next cue. The cue, I reckon, would be centered in and around the earnings season and the commentary which we will get from companies from the festival season. Remember, this time Diwali is late. So there is a lot of festival and pre-festival indications which we will get from companies in middle of October, and that's the time you also will have your earnings season. So what we are staring right now is a market which is lacking direction, which is looking tired, tired. Suddenly in middle of October, the market may just give you a very strong direction, a very strong move on the upside or downside. That's debatable. But for the moment, I think it appears that for next 2 weeks, the global Q is pretty much status quo. You heard from Fed, Reserve Bank of India will not move. Those are at best patchy. So there is no inertia in the market, and this is typically a tired market or a phase of the market there where bulls are also saying that, guys, let's take a break. It's just one of those phases.
Bulls and bears. I mean, looking at the index level yesterday, which was just so flat.
See, bears were never in the game.
Yeah.
Frankly, bears have never been calling the shots with, one or two brief, patches
Sectors, yeah.
in last couple of days.
Yeah.
But the bulls are actually saying what our producer tells us, time to take a break.
Yeah, but that's exactly what I was checking out as well when it comes to the kind of data that we've got overseas. Nothing really much in terms of cues on Wall Street, but we did manage to wrap up yesterday's trading session for Wall Street. That snapped that 4-day losing streak, so managed to end in the green. In terms of the Asian markets, there's inflation data that's coming out across the region, so it is looking a little bit tempered and a little bit choppy when it comes to the Asian screen. But more importantly, the other cue is the fact that is at about $93 to $94 a barrel. You've got the bond yields which have continued to rise further, so close to 4.5%. So in terms of the global setup as well, I guess, Nikunj, is there indications, given the way the dollar index is at, etc., as the other indications that it is in a bit of a pause mode?
See, Brent and dollar index, they're both going high. Technically, it's not great news. We can, there is enough and more reasoning why strength in dollar index and strength in commodities in the short term is not good for emerging markets, and I think that's visible in the way if you look at flows. We look at last week's data in terms of market flows. India is outperforming, but even though India is outperforming, the flows have been negative into emerging markets. Dollar index is at 106, but remember last time when the panic happened, the dollar index was at 115. So dollar actually can move higher, given that right now money is moving back into treasury, where treasury yields are now nearing 5%. So we are going through this periodic adjustment in the market where the Fed commentary has changed. There you go. That's the flow. I think this is typically when the dollar index is strengthening. So the impact of the dollar index, I think, is visible in flows. I don't think anybody is really worried about this sharp uptick in yields, because that is something what markets have learned to live with. But I think in the near term, this pressure on flows will continue because a lot of money allocators I've spoken to. I was at a investor conference last night, and the sense I've come back with is that they like India, they love India, but they want to buy India at low levels. Also, some allocators are saying that if you're getting 4.5-5% plus risk-free return in US market, why do we risk? Why do we chance our arm? So that kind of a positioning change, I think, is visible, and I think it really could happen for next couple of months more.
Yeah, absolutely. Okay, let's just talk about some of the sectors and stocks that have been weighing heavy in on the markets. And one case in point has clearly been Reliance Industries. Just any news flow doesn't seem to be really lifting up the stock. And if I were to just talk how the stock has been panning out, it's fallen for a 5th consecutive session. Not just that, looking at the technicals, it seems that it's now getting into oversold zone.
See, Asha, I know everybody's talking about that underperformance in Reliance, but I beg to differ. I say that okay, you're looking at the underperformance in Reliance, but then you go to add back the value of Jio Financial Services. That's a good need 250 rupees. Yeah. So you add that 250 rupees, then the picture for Reliance is different. So that's one point. Second, yes, if you look at Reliance in isolation, which is what you need to do, it has not really participated. And B, in the near term, I've always seen with Reliance, and since there is so much of rich history available for Reliance, that when the company has always announced a large capex, the stock tends to underperform. And last AGM, they announced a large capex, and another 2 years that capex will start. So that, in a sense, has really been a factor why Reliance historically underperformed. So the way Reliance has historically moved, that will give you 2-3 years of underperformance and then one or 2 years of big move. So I think it is just getting ready for a big move. Now, whether that happens this year or next year, that's conjecture. But I think that's how typically Reliance has moved. Also, in terms of the fundamental factors, well, GRMs are not that strong. The global demand is not that interesting for the OTC segment. So there are other fundamental factors also which are at play. But for markets to move higher, I guess Reliance has to move higher. The more Reliance will consolidate, the cheaper it will get. I guess this is one heavyweight which in fact can really do the trick. Just think about it. You get HDFC Bank back up and Reliance back up, the Nifty could be very different. Absolutely. But the problem is between Reliance and HDFC Bank, it's a good 16-17% index. Actually more. HDFC Limited and Reliance is much more because the combined entity is much more. It's north of 20. If they both come down, it will have an impact on the market. And if they both flip, we are looking at an upside. So a lot actually hinges on these two stocks which will determine the near-term direction.
Yeah, the heavyweights really pulling back.
It's about 14.5%.
HDFC and HDFC combined, and then Reliance would be about 10.
14.5% is HDFC Bank, Reliance is 10.8%.
Yeah, so that's 24%.
Yeah.
That's quarter of index.
Yep, so the heavyweights, they have been backbenchers of late, and perhaps once we see some sort of activity or some sort of reversal, that'll have a totally new implication and meaning for the frontliners as well. All right, talking about the global cues in further detail, as we said, yesterday we managed a flat close with a mild positive bias, but it would be interesting as well to understand what the global commentary has been like. Harsh has been doing a little bit of digging and now joins in with the latest updates. Harsh?
Well, yes. So the chief of JP Morgan commenting on inflation as well as a whole host of other factors. On inflation, he said when spending, especially government spending, is so high, he believes that inflation is largely unavoidable. Quickly moving on to rates, he talks about how he expects rates to be higher for longer, largely because the stimulus has created a feel-good factor and therefore rates are yet to go up. It's actually creating a sugar rush. But what he believes is rates will probably go to a 7% mark, and he believes that the worst case is 7% plus stagflation, not part of the quote, but nonetheless, that is something to be noted. And what he also suggests is that the world is not prepared for that 7%. He believes that the current context has exposed certain problems with regard to SVB and everything that happened around it. He believes that concentrated deposits move in flock, and therefore modified regulations are needed, and that is the other comment also coming through. Then we also had Ostan Goolsbee, who is of course the Fed president, one of the Fed presidents. He talks about how high inflation remains the biggest risk for the economy. Inflation staying stuck above that 2% mark is a key risk, and that will warrant tight central bank policy. He believes the economy is more at the moment in terms of its growth and pace is higher, and the price rise and the increases are a clear risk is what he continues to talk about. He says Fed would play this by the year. It will be an assessment on the basis of every meeting, and on that basis he believes will drive Fed policy going forward. Also, with regard to what Neil Kashkari, who's also a Fed president, speaks about, very similar commentary coming in from both of those. He believes that the economy is much more stronger than earlier anticipated, and the margin in that regard with regard to rates will probably have to go a little bit higher than what the earlier expectations was, as well as held higher for longer.
Let's take it across and focus in on our markets. We've got Naresh and Kunal both joining in on the show. Kunal, on a net basis, the index did nothing yesterday, pretty much for the better part of yesterday's trading session. What's that telling you?
Well, it indicates, Aisha, that after the 4 days of consistent selling, the markets are not ready for a decent bounce back. And, in fact, I remember, I think yesterday, we saw the Bank Nifty coming closer to yesterday's, in fact, day before, yesterday's trading high. And, it came very close in towards breaking above that pattern of higher highs, or rather lower highs and lower lows. But it failed to cross over those levels. And from the intraday highs yesterday, we managed to see selling pressure both on the Nifty as well as for the Bank Nifty, closing absolutely flat. Now, the interesting part is that the Nifty is still holding on to the 50-day moving average, but the Bank Nifty is underperforming and has now come back or fallen towards the 100-day moving average. Now, both of these are very crucial levels because, if we don't hold back towards these key support on the short-term charts, we would expect further selling pressure for both of the indices. So, my view remains to be cautious to negative on the indices. I even last week mentioned that possibly 19,300 as well as 44,000 for the Bank Nifty. These are the two levels for the Nifty and Bank Nifty respectively, which you can test possibly in the next 1 week or so.
Naresh, two stocks, like we were discussing just a short while back, weighing heavy on the index non-performance, if you will. HDFC Bank and Reliance Industries. Do you think they will participate anytime soon and take the market higher?
So as of now, there are no indications in terms of them reversing. But the only thing which we noticed in HDFC Bank and Reliance Industries yesterday was we did not see much of a follow-up sell, which is where we go back to the same prices. 1500, 1530 was the price for HDFC Bank in March of this year, which is where it bottomed out. For Reliance, 2300 roughly has been a pivot level because 2250 to 2300 is where it topped out in 2020. And that became a zone of resistance, then it broke out, then it ended as support. So this is a pivot area. So out here, we need to wait for a few sessions for a recovery and then conclude. So in the same way for the Nifty and the Bank Nifty, the trend is not reversed. Yesterday was a pause day, but once we start crossing 19,800 and 45,000, 45,200, that's the point of time you call it a reversal. So for now, we are in a slow drift on the heavyweights, but a similar drift is not seen on the mid cap and the small cap indices. So still can remain stock specific bullish.
All right, a slow drift for the indices and some of the heavyweights. That's what Naresh's view is. Would be interesting to find out what exactly our chartists are picking out as their top ideas. And Kunal, you've got a buy and a sell call.
Yes, Avan. So I'm sticking with the buy which I had given a couple of days back. That's on MCX. Earlier targets were 1860. The stock forming a classical bullish flag pattern. Yesterday was a good day for the stock in terms of a breakout, closed almost at the 1900 mark. So would expect the momentum to continue for MCX. Targets revised to 2000. Traders could fresh buy at current levels and stop loss at 1845. And the second one is actually a sell. It's a sell on India Mart. The stock is showing signs of weakness on 3 intraday charts, breaking below the psychological 3000 mark, as well as showing signs of weakness of a swing breakdown. So would suggest a sell with a target of 2880, stop loss at 2990.
All right, Naresh, let's find out what's on your radar this morning as well. And you've also got a buy on MCX.
Yeah, so the first is a buy on GAIL India, which is a defensive bet. The stock has retested the breakout point of 118, 120 and started making a reversal. Longer term charts look very promising for the stock. A big multi-year breakout done here. And from this retest should again start a fresh move towards 135 plus levels. Stop loss at 117. Second is a buy on MCX, clearly a breakout done yesterday. And the stock has been making multiple attempts around that 1800, 1820 mark. Yesterday was a good price volume breakout. Any fade off today would be a buying opportunity. This could go towards a new all-time high going forward. Stop loss at 1820 and a target price of 2100.
Right. Okay, let's move on. Let's discuss individual stocks. And Anisha is here in the studio for exactly that. Anisha, Eicher Motors and Jeffrey believes that rising competitive concerns weighed heavy earlier, but channel checks seem to reduce, but that there's nothing like that.
Well, yes, absolutely. And they are saying that it could be a good opportunity that you should buy into this underperformance, because this year so far, the stock, of course, has been plagued by the higher competition issues. And that's the reason the stock has underperformed Nifty Auto Index by a good 24%. Now, they're talking about, yes, Hero Harley as well as Bajaj Triumph bikes are big competitors. But if you go by channel checks and the web searches, it doesn't seem like that they have managed to eat up a lot of Eicher Motors share, and that's quite visible in the data as well, because since July there has been 20 to 26,000 kind of bookings that we have seen for Hero Harley as well as Bajaj Triumph, while for Eicher Motors this has been almost 69,000. So the numbers speak for themselves that these new bikes have not had a big impact on the order book of Eicher Motors. Now they are saying that this time is ripe to buy Eicher Motors, giving the elevating competitive concerns along with strong tailwinds of the two-wheeler demand recovery and the industry premiumization as well as exports. They therefore have a buy. They prefer Eicher Motors as well as TVS Motors versus Bajaj Auto as well as Hero MotoCorp, and that's why they have raised the target price now, which stands at almost 3,000, which stands at 4,150 for Eicher Motors.
So, you know, I'm surprised that why Hero MotoCorp and Bajaj actually went higher when the launch was announced, because Eicher again and again, time and again, has endorsed the fact that they are commanding market share because they have a brand and they have a customer recall and they have a cult culture which is not getting challenged. So while we've been talking about this narrative that, okay, it's not going to be easy to displace Eicher's market share and the stock had moved into some kind of a downward bias, I would say rather than looking at Eicher, look at Hero MotoCorp, which saw this mini re-rating on the assumption that they would be able to do something very special to displace Eicher's market share. So for me, more than Eicher, which I think from last couple of weeks was evident when the numbers, when channel checks were done, I don't think the upside in Eicher is going to be very large, but the downside in Hero MotoCorp just opens up again. I mean, could it be one of those phases where Hero MotoCorp, whatever they're doing, they are just not being able to really do something. Yeah, they've not been able to crack the code. Just think about it. I mean, Hero MotoCorp, India's biggest two-wheeler company, but post the split, they've not really managed to make an export franchise. That same time,
Bajaj back in the heydays.
No, Aisha, all I'm saying
A
is
different segment though.
No, Bajaj has almost 50% of its profits which are coming from exports now. They managed to build a franchise, and when I went to Bajaj Auto, I mean, they have a very nice board and they take a lot of pride in saying that we've reached over 90 countries in the world. Hero MotoCorp has got minuscule presence in the global market. That's one cross for them. EV, they're just not there. And in terms of premium biking, they're trying to come back, but I think it's going to be a very long road before they're able to really have an impact. So for a brand which is a powerful brand, which resonates with India, which was known for innovation, which in a sense, I mean, the Munjal family took a leap of faith saying that, look, we are confident enough and we want to split with Honda and we can be a big company on a standalone basis, but they've never really lived up to what the expectations was. And if that was not enough, slow down in the two-wheeler space.
Okay, so perhaps in the slow lane when it comes to Hero, but Bajaj Auto, Eicher Motors in top gear. Let's move right on then and also talk about the implications of the solar module prices which have been on the slide, Anisha.
Well, yes, as per a Nuvama note, they have crashed in all-time low levels, and that's because, of course, the polysilicon prices have come down. There was a lot of glut in the European markets, and all of that meant that the prices of solar module have taken a bit of a plunge. In fact, on a quarter-on-quarter basis, they have pretty much halved, in fact, down anywhere between 21 to 50%. Now, optically, you might think that this would be bad news for the producers of the wafers and cells and the PV modules, but that's not the case for Indian industry, because right now the Chinese prices were, of course, much lower than the Indian prices. But given the kind of impediments, etc., which are there for Chinese exports at the moment, because US has pretty much banned imports from China, so that opened up a door for the Indian manufacturers to actually export. In fact, 90% of our exports go to US itself, and there as well, given the prices have taken a bit of plunge, we have become very competitive there as well. So overall, it's a good news coming in for the PV cell manufacturers back home in India, and also good news for the people who are setting up those solar plants, because now they are able to get the cells at cheaper prices as well. So seems like a bit of a win-win coming in for both the manufacturers as well as the users back home in terms of people like, let's say, Tata Power or Reliance, etc., who are setting up the solar parks.
See, incrementally, solar panel prices coming down, that means that the focus on alternates is only going to increase. And we know that India, in terms of the capacity addition, what they've done, it is equivalent to what, let's say, US actually did, last year. So incrementally, this is great news. But I don't think there are any two pure play where you can say that, okay, these are the companies which would benefit disproportionately. There is Webull Solar and Sterling, the Palanji Group company, which is where now Reliance has taken some stake. It's just not coming to
Sterling
my
and
mind.
Wilson.
Sterling and Wilson, that's the other one which would benefit. They are an EPC contract company. But what it means is also that incrementally you will see a big nudge moving towards solar. The solar prices couple of years ago were 15 rupees per unit. Now they've come down to 4.5 rupees per unit, and post this they may incrementally come down. The whole idea here is that solar energy will now get more and more affordable. This will have long-term implications and this will have near-term implications. This will have near-term implications for what Anisha said in terms of the companies, but long-term implications are that the dependence on fossil fuel, I think, will dramatically reduce as affordability increases.
Okay, in fact, one of those players is exactly who we're going to be talking about too as well. One of the beneficiaries, that is. In fact, Anisha had an exclusive chat with JSW Energy's Prashant Jain, and he says that they could be looking at raising fresh capital considering the massive opportunity in the power space.
Given the size of opportunity, given the execution capability we are having, and given the position where we are coming at this point of time, we feel that there could be an opportunity to do a capital raise at NEO level, and we would like to do at opportune time at a right valuation which is accretive to the shareholders, and deploy that for the incremental growth.
Sure. So, and there have been reports going around that JSW Neo, which is there, is looking at a stake sale to the likes of TPG, Blackstone, etc. Could you confirm that you are in talks with them?
So, as I always said, that it is, we don't want to talk about the names and other things, but we are really talking about our strategic intent, that we feel that if there are right partners with us who understand the power sector well, who are here for a long term and deploying the patient capital, there could be a proposal where we can work together. And as and when anything is materialized, something meaningful happens, we take it to the board decides that way. We will be certainly talking to the investors and media at that point of time. But strategic intent is for sure that we would like to do at some point of time.
And is it likely to happen over the next 6 months? Because the capital markets are ripe right now.
So there is no time frame or a limit we have set up for ourselves, because we have...
But could be there.
Yes, but it can be tomorrow. So it depends. So as and when anything materializes, we will certainly talk about it. But yes, what I can say is that yes, there are a lot of interest from the people who want to bank upon our execution capability, our differentiation, what we are putting on the table in this country as compared to the other players. So they want to join hands with us, but we have to take a call with whom and what time, and board will be considering at some point of time.
And how much are you looking to offload? Is it going to be 10-15%? Is it going to be majority? At least some sense as to what size you're looking at.
No, I can
offloading.
understand you are putting the question from different sides, but I cannot talk about anything. But yes, it will be certainly something meaningful.
Thanks for staying on with us. Still tuned into the market. Let's put the spotlight on individual stocks then. And Strides Pharma is spinning off its CDMO business along with the soft gelatin unit into an entity that's going to be called OneSource. So how is this shareholding going to change post the restructuring? We've got Samit here to walk us through the contours of this deal. Samit?
Strides has announced this major restructuring when it comes to the CDMO business. Now, Stride currently owns 33% stake in Stelis, which is also one of the biological CDMO business of the company. Now, what is the proposed restructuring here? They will be transferring the soft gel, which is the CDMO business owned by Strides, and an injectable manufacturing business held by the promoters in Stelis Pharma. And the resultant Stelis business becomes the global CDMO major, spanning into biologics, soft gels, and injectable, which will be now called as OneSource going forward. Now, this business will be deemed and listed separately on the stock exchanges, and this process is expected to take around 12 to 15 months. Now, the share swap ratio would be for every 2 shares of Strides Pharma. The shareholders will be getting 1 extra share for this new entity, that is OneSource. Now, as per DAM Cap estimates, Strides Pharma shareholders will own around 42% of OneSource on listing. Now, how does this help Strides Pharma shareholders? Now, this is a significant value unlocking that we are seeing, because Street currently was not valuing the Stelis business, and as per fair valuation, now the Stelis business will be valued at close to 364 rupees per share. Now, what is the growth outlook when it comes to OneSource? Now, OneSource entity is expected to generate a revenue of close to 180 to 200 million US dollars with the margins of close to 30% which has also the margin potential to go up is by around 5 more percentage points over FY26, and it also says that OneSource revenue potential is expected to double over FY27 to FY28. Now, based on these numbers, what DAM Cap believes that the EBITDA in FY26 for OneSource could be anywhere between 80 to 90 million US dollars, which values this OneSource entity at close to 1.6 to 1.8 billion US dollars, which implies into a per share value for a Strides Pharma shareholder at close to 650 to 750 rupees per share over the next 2 years, which means that any shareholder who's buying a Strides Pharma share or has a Strides Pharma share is getting this OneSource business literally at free of cost at this moment, and hence it is termed as a significant value unlocking when it comes to Strides Pharma as per DAM Cap analyst.
Yes, and no wonder then that the stock is well perked up a good 7.5% in trade, as did MCX, which had a fresh 52-week high just yesterday amid news of the launch of a new trading software platform. In fact, reports are suggesting that the exchange is set to go live with a new platform come October. Sharad, in fact, my colleague, is here with more details on the same. Sharad?
Well, yes, in focus we are having MCX, and there's an important update coming in when it comes to the progress of a new software implementation coming in. Now, the important thing is roughly 90% of the compliance approvals and the checklists have been completed, and the remaining 10% that is expected to be actually completed over the next 3 to 4 days. Now, the important circular has also come where the mock trading session is expected to happen today, which is September 26, and the reports also suggest that the company has actually severed its ties with its anchor founders, 63 Moons, as well. Now, because of the shift of the new trading platform, they would be leading to immense cost savings, and do remember that the delay of transitioning in new platform was actually costing the company 125 crore rupees per quarter. And if you look at the stock movement also, the stock has hit its 52-week high levels.
Thanks very much for giving us those details, but there's lots of other stocks that will be in the spotlight today. Aavas Financiers, for instance, and Venus Pipes in focus. This is after a commentary that's come in from their management meet. Vinny joins in with the updates, and Vinny, for both, it's been fairly optimistic.
Absolutely. Let's start with Aavas Financiers and the commentary that has come in from the management meet. Now, Nirmal Bang has mentioned in its note that the disbursement what the company highlighted in terms of June 2023, that has normalized in June as well as July 2023. They expect to deliver AUM growth of 20 to 25% in FY24. And then that the competitive intensity remains high in the housing loan, but non-housing loan portfolio, the share is expected to expand to 35%. Driven by the MSME lending. Other than that, the spreads are to be maintained at 5%, and the OPEX remains at elevated levels as the company is investing in the franchisees as well. Operating leverage is to kick off in by FY25, and stable asset quality trends is what we're expecting for Aavas Financiers. So a bit of a positive commentary coming in on that front. But Venus Pipes too also on the back of the commentary. Now, Nuvama in its note is highlighting about the management commentary, talking about Venus Pipe being on track for further capacity addition beyond the 33.6 KTPA for internal accruals to drive the growth beyond FY26 as well. Current capacity utilization is to rise on the back of government's ADD, that is on a duty on the imports, as well as the push for the BAIS certificate product as well. New sales ahead is for the domestic and European market is to provide a growth push for the company in terms of venous pipes, as well as in terms of direct sales. Backward integration and large diameter pipes are going to be the key focus areas for the company, and they have been focusing on improving their exports with focus on Europe, Africa, USA markets. So obviously that expansion and focus is going to be further increasing in these markets, and venous pipes already has an order book of around 200 crores translating and to an order visibility of for around 100 days as well. So let's keep an eye on both these stocks on the back of management need.
Right, Vinny, we'll leave it at that. In fact, let's just throw light on what's happening within the money markets as well. We've got Radhika, senior economist and executive director at DBS Bank, joining in on the phone line right now. Radhika, hi, good morning. Great to have you today on ET Now. Radhika, the dollar index already at 106.97. It's near November 2022 highs. What's that telling you?
Hi, morning. Certainly, I think the bond market in the U.S. is coming to terms with the Fed talk, Fed speak. I think the realization is dawning that, even though they might or might not hike going forward, our base case is that, Fed won't hike. But nonetheless, it's going to, the language is going to remain very hawkish. And there are a couple of reasons why they need to sound hawkish. Number one, if they sound, like they're okay with the way inflation is panning out, I think there is a risk that monetary conditions might, loosen. So that's number one. And number two, real wages are actually in positive. So, that could also, so if you let go vigilance too early, there is a risk that inflation could come back. And the third, of course, the economy is generally quite resilient. So I think the Fed talk, which is still very hawkish, they've left the door open for further hikes. I think the yields are essentially, just mapping with the Fed speak. And we're also looking across the other developed market yields, and there tends to be a correlation among these DM yields as well. And there too, most of the reaction from the policymakers and the subsequent reaction on the bond markets is similar, which is, that yields in general continues to stay firm. Taking that to your dollar index question, our own in-house forecast by our FX strategist is that the dollar continues to benefit from where it is in terms of rates, where it is in terms of growth, as well as its inflation dynamics. And we, in fact, expect into the fourth quarter as well the dollar to remain good.
Yes, indeed. Highest level since 2007 when it comes to the 10-year Treasury yield. But what about the implications of a potential U.S. government shutdown? Moody's going on and saying that could be a credit negative. What exactly is your reading of this news piece?
Certainly, I think that is, again, something to focus on. We are 1 week away. The U.S. works on a fiscal year, which runs from October to September. So we are at the end of that mark. We are heading into an election year. We have been here before in the sense that, first it was a debt ceiling negotiations that were going on, and at the end, we did see that pass as well. So while this is a risk event that the markets will watch out for closely, we do think that both sides will compromise, and there won't be like a prolonged delay in spending, especially towards the very important expenditure heads, including to the government employees. So yes, a risk event, but we wouldn't attribute too big weightage on it. We do think it will iron out, and soon after, you've got elections around the corner, so the tone very much will change towards that. But that doesn't change the overall picture that the U.S. fiscal numbers continue to be quite. The fiscal policy is still very expansionary. The deficits have continued to rise. Their issuances are also increasing. So I think that theme very much remains in place, and that's why you had seen Fitch also take action earlier this just in the past month or 2 months.
All right, Radhika, thank you for that. Meanwhile, as we walk into trade this morning, 106 for dollar index, 94 approximately for Brent, 1% down for Nikkei, and SGX is indicating that we could be in for a flat start. I just thought that it's not going to happen soon in terms of the extension in trading hours, but looking at, when you get something like no comments from the ministry, you pretty much know that things are in the works.
Kunal, what you gonna do now?
Morning 9 to 11.
Are you ready for it? You think it's feasible, it's practical? Does it really make sense to do it?
See, I'm not sure whether it makes sense or not. I think they have their own reasons why it makes sense. But then it's going to be very difficult for an average trader to try and grapple with such long hours, because then you're talking of 5 days non-stop trading on a week. If there is budget day, then if it falls on a Saturday, Sunday.
And BSE may follow suit now, they're saying.
6 to 9, and then they're looking to extend this to 11.
Yeah, but see, it'll 6 to 9, then maybe stock futures will come in. I just thought through it, and I just say, okay, you make it 6 to 9, you want to make an instrument where, because what is happening in the global market, you want to create an alternative, and it's an hedge, and a lot of things are moving on the DMA now. So I do think implementation is a problem. Lifestyle is something which is always a challenge. When markets move from 9 o'clock, 10 o'clock to 9 o'clock, of course it became a lifestyle issue. All of us had to start our day early. But I think there's a lifestyle issue there, considering the infrastructure of what you have in Bombay. But second, in terms of technicals, since index futures will start and options will start,
Expiry.
How do you decide the price? Because if the cash market does not move.
Well, the bigger concern is Nikunj, expiry. Because if we say expiry is on Thursday, then whether 3:30 the time will be a cutoff for the expiry for the options, or whether we are extending this to 9 p.m.
And imagine during that period a result comes. It's
like a
TCS,
Reliance. Will always come Friday at 7 to 8 p.m.
Yeah.
So that is something which we need to understand. So options market always derive price from the spot market. The spot market in this case is not going to change. Exchanges will have to figure out something. But I will not be surprised that somewhere in FY24, this could be the reality. This really could be the new reality. Good, bad, ugly, I'm not saying that. But this could be the reality. Digantharia has been thinking about it also, right? घर कब जाएगा? ऑफिस में घर बना लेते हैं. छोटा सा.
घर में ऑफिस बना लेते हैं. I would say the other
Yeah, that's a wiser one, Nikunj.
Imagine what will happen.
I don't know much. See, life for us will really become longer in terms of working hours. But yeah, I think these are things which are beyond our or my control. So I just think that go and invest in the biggest gaming company of India, which is the National Stock Exchange. It's unlisted right now, but someday it will list. I think, see, the whole if you look at the foreign markets and the foreign exchanges, I think the trading hours there are quite high, quite long, and we'll eventually go there because, as you exhaust the revenue drivers, see, like earlier we just had a monthly expiry. Now we have weekly, and, within week, every day there is some other expiry. So I think these are measures which the exchange will eventually take to earn the revenue. And I think government is happy because it makes the STT, it makes the GST, and in all kinds of gaming activity, it's the government who makes the most money. So, government also implicitly supports a lot of these measures. So I think, we don't have much, someday it will happen. I hope it happens later than earlier.
I want to go back to that point which we've been again and again factoring out, is that 9 out of 10 trades at the retail level in the options market are loss making. And we've seen a bulge up in the options market. Something which the regulator and everybody has raised concerns about, that how the retail is actually losing money in the options market. More extended hours only means that there is going to be more activity. Very simple. Very, very simple. Meanwhile, RBI has given a nod for issuance of co-branded credit card for Poonawalla FinCorp. It is exactly moving in the right direction. The Poonawalla Group acquired an existing NBFC, rebranded it, capitalized it, and now they are expanding it in terms of where they want to take the reach and they want to take size. Digant, you track this space very closely, and Poonawalla FinCorp, everybody is saying, is the dark horse. What Bajaj Finance did, let's say, in last decade, Poonawalla FinCorp could do in this current decade. Is that true? Do you think there is possibility in thinking like that?
I think, last decade, Bajaj Finance's stock was up almost 40 times. I think Poonawalla FinCorp did that in 2 years. Like, Magma was $20 when Poonawalla FinCorp came in. Today it's 400. So the stock has done the same thing what Bajaj Finance has done. But unfortunately, on the business side, I think Poonawalla is very, very, very far away from, like doing anything close to Bajaj Finance. They just say that they have all the products and they're trying to be like Bajaj Finance, but they are still more like Magma and less like, Magma was the older avatar of Poonawalla. And very much, not like Bajaj Finance. See, building Bajaj Finance is not like a 2-year process. It's a 12-year process. And that too, Bajaj Finance did it when competition was low. They got 6 years to do their consumer durable finance and personal loan cross-sell. I think Poonawalla is in for a lot of competition. And I did not like, especially when they sold off their housing finance company. If you look at Bajaj Finance today, roughly 25-30% of their AUM is a comes out of the housing finance subsidiary. And Poonawalla FinCorp just went away and sold the housing finance piece. So I just think that, I really don't know about the long-term intent of Poonawalla's in this company because it's, the actions don't really say that they are in for a very long term in this particular game. So investors should really not think of this is the next Bajaj Finance. On the business side, it's hardly Bajaj.
So is Bajaj Finance the new Bajaj Finance and will continue to be so, Digant, especially after the fundraise announcement?
Absolutely, Aisha. I think it's always, we say that the next HDFC is HDFC, and similarly, the next Bajaj Finance is Bajaj Finance. Obviously, we cannot expect an encore of the last decade in terms of stock price CAGR. But see, now it's almost 2 years that Bajaj Finance stock has done nothing. Like in the last, it hit like $7,500 in September 21. We are sitting in September 23. So 2 years of consolidation has happened, and in those 2 years, I think Bajaj Finance has at least got its online piece right. It was always the champion of the physical world, personal loans and the buy now, pay later kind of loans. But in the online world, it was far behind. I think in the online world, they have caught up. So as I see Bajaj Finance today, they are like, a mix of everything, the old world, the new world, the physical, the digital, and all of these things. So I think now at least we can expect compounding from this stock. Earlier, we've already seen 2 years of consolidation. So I think that, my neutralish view on Bajaj Finance is now coming to an end, and we can at least see compounding in this stock going forward.
Okay. Meantime, wanted to also get in your take then, Digant, on Reliance Industries. Of course, you have seen that underperformance vis-a-vis what the index has done. But do you believe that if we were to add the value of Jio Financial, that you wouldn't really be able to characterize this as actual underperformance? Your take?
See, I think the underperformance of Reliance should continue. Especially the excitement around Jio Financial is quite unwarranted because, Jio Financial, all said and done, I think we discussed this on the show that to reach a profitability of, say, 10,000 crores, for a Reliance, nothing less than 10,000 crores of profits becomes a meaningful number. I think they have to build a 3 lakh crore loan book and, which is at least 5 to 7 years away. And I think Reliance this time knows that, we should not rush into the lending business. The Jio Financial guys, the CEO of that company has a lot of experience in developed market consumer financing. So I think they are going to take it slow and steady. It is us, the investing community, which is getting more excited. I think they have a strategy of slow and steady. So I think that Jio Financial will add value, but very, very gradually. It's already very richly valued right now, as far as I can make out. So I think that, because of Jio Financial, the Reliance, impacting Reliance is very, very far short. I think it's more to do with how the retail business of Reliance turns around. That is going to drive the bigger part of the stock.
Okay. I'm just going to, mark a few things in terms of where the market is moving, in terms of where the setup is, and we've seen a time-wise and a price-wise correction which has kicked in defense and railways. Again, everybody likes to own the stocks which are outperforming, and defense and railways is where the real sweet action is. Some of these stocks have hit a pause button. So on a decline, what would you be looking at buying?
Okay. So Nikunj, I think that, let's see, this whole PSU rally started with the PSU banks, and then, it broadened into defense, railways, and finally the whole power utility space. I think we are just now seeing that the defense and the railway part has paused. I think PSU banks should take forward the PSU rally, and even some stocks like say Coal India, MOIL, the resources intensive stock, because they benefit out of this inflation, so they may actually start doing well. But very specifically, between the railway stocks and the defense stocks, what we like, I think the railway stocks really have a lot of steam. So do defense, but I think the rally is far ahead of what the numbers delivery would be. Wait for some cool off, and something like a Titagarh definitely should be in the radar, and any good amount of price decline, they can be used by long term investors who missed out the earlier leg of the rally.
That's the delivery data in some of the PSU banks. Digant, should one avoid smaller PSU banks? They don't have size, they don't have reach, they don't have NIMs, they are going up. And now the free float, they're trading actually more than the free float in some cases.
Yeah, absolutely, Nikunj. Even that free float is the game here. So if you look at these smaller ones, the Central Bank of India, IOB, UCO Bank, IDBI Bank, I think the free float is only 3%. So we all know, how easy it is to push or to charge up a stock which has just 3% free float. So I think it is definitely that game. When we look at business capabilities of a PSU bank, there are two things which anyone can look at and decide. See, one is the CASA ratio, and second is how good are they at lending to the retail and the SME segment. Because retail and SME lending requires a lot of capability. Most of the PSU banks, the smaller ones, are only doing say industrial or corporate loans and agri loans. So they really don't have the capabilities. So I think one should really be away from these smaller PSU banks. But I think the larger and the more strategic PSU banks, something like a Canara or a Union or a Bank of Baroda, I think they still offer a lot of a lot of juice to the investors. So I think anybody serious about the PSU banking space, the serious business upside is in these larger ones rather than the smaller ones.
Digant, also curious to know about the primary market action, right? The amount of paper that's been hitting almost on a daily basis. I mean, even as we speak, you've got Nuvama Wealth, which is going to be listing today. You've got the JSW Infra IPO currently on, Updata Services IPO as well soon. Anything that's interested you of late?
Oh, I think it's so difficult to keep a pace of what's happening in the primary space, because every day something or the new something or the other keeps coming up. So I just think that IPOs generally we have tried to keep away, because the allotment itself is a problem. You hardly get anything. Plus they already list at very large premiums. But amongst the recent ones that you mentioned, I think Nuvama Wealth certainly deserves a look, because wealth management as a space is really expanding. And the good part about wealth management is it is agnostic to products. Like, a broking product can slow down, an F&O product can slow down, mutual funds can slow down, insurance can slow down. But every time there's some product which keeps doing well. And I think wealth management companies can actually navigate this whole cyclicality within products very well. And we have seen that how IIFL Wealth has, really scaled up well. You look at companies like ICICI Securities, HDFC Securities, they are also saying that we want to enter into the wealth management space and, become like the affluent class wealth management companies. So I think wealth management is really the future, and Nuvama Wealth is something which I'll keep a close eye on.
Okay, just looking at the texture of the market yesterday, it was MCX, it was Bajaj Finance, trend jumped up about 4.5%, and the sugar pocket also looked very sweet, along with some of the smaller cement plays. So yesterday you had a Dalmia Bharat and a Aramco which held out, and that was not the case across the sector actually, and maybe marginal gains coming in for ACC. Naresh, wanted to revisit some of these charts with you. A Trent, MCX and Balrampur Chini. Big moves on the stocks yesterday.
So Trent is a tough one. The stock actually gave some indications of a pause over the last 2 weeks. Just did not break down and has made a fresh move. The stock continues to surprise on the way up without taking much of a correction. So the risk reward is not great. The stock has moved up from 1300 just a few months back to almost 2100, but technically a short-term breakout done here. So a trading stop loss would now be at 2050, but the risk reward is not great. The stock has a tendency after making a big move going slow and steady, so would avoid. MCX is the more interesting one because that's a stock which has gone nowhere for the last many years. The stock used to be at 1600 back in 2012. So there have been hopes on the stock for a really long period of time and nothing has happened. And now we are on the cusp of a trend change, which is where we've broken out above 1650 and now 1850. And hopefully going forward, we would break about into a new all-time high. So on every dip, MCX looks very promising. The structure is in place for a longer-term trend change here.
Digant, I look at MCX and I say, okay, this is almost like a monopoly business. It's an exchange. NCDX is not large. Commodity prices are going higher. Indians are going to be trading more in commodities. A, need-based, and B, also in terms of speculation. But MCX as a stock, frankly, has not lived up to its expectations.
Absolutely, because I think you made a very nice statement that Indians are going to trade more on MCX, whether it is for need or whether it is for trading, or just sort of this. So MCX really did not do a great job in terms of the original mandate of allowing the commodity users to hedge their product. Okay, because a lot of people still find it more easier to hedge their gold and other commodities on the London Metal Exchange, via Dubai or via some other route. So I think MCX really suffered because it did not do its core job well. But somewhere in 2019, they launched a lot of these commodity options, and commodity options has really picked up. Like if you look at the revenue pool or the trading volumes which come out of options, I think we are seeing a similar bull market in commodity options as well. The ones that we are also seeing in our own equity markets. So I think that has really changed the game for MCX. I think it is just waiting for this, the software part of MCX to get resolved. And then I think, it really makes, as Nuresh also said, it's set up for a new lifetime high. I think once the software issue is resolved, which probably October 1st will give us the first glimpse of that, I think we are set for, much longer journey here. And Nikunj, as we discussed just earlier, that Indians like anything which has an element of gaming, whether it is Delta Corp or whether it is a gaming company or whether it is a stock market, right? We see that 99% of India's volumes come out of F&O. So Indians like this whole, the gaming part of investing.
Final question, Digant. In last 3 months, how have you adjusted your portfolio? Where have you used strength to your advantage to lock some gains? And where have you added more positions?
So I think that the whole capital goods, industrial, and railways, these three themes, these are the pockets where we have taken some money off the table. We are not negative on this space, but we just feel that the stocks have run up a little faster than what the fundamentals have helped. So we've taken some money off of this space. The companies which are in electricity and pumps and motors and compressors, all these industrial parts. We've taken off some money there, and we have adjusted that into public sector banks and into the resources companies. The companies who own the mines and who do the mining, something like Coal India or a MOIL or an NMDC. So I think this is one trade that we feel should hopefully play out in the next 6 months.
Okay, bunch of other stocks which were pretty active yesterday. A, of course, Karnataka Bank, after looking at equity issuance of about almost 1,500 odd crore rupees. There was, of course, Delta Corp as well, which has got a fresh intimation for payment for, alleged tax liability, which equates to about more than 11,000 odd crore rupees for GST. And, this I wanted to talk about, Digant, because, yesterday, I think in the bulk deal notification, another HNI investor sold 3% equity. I mean, is it story over for some of these gaming companies for now at least, till there is regulatory clarity?
Yeah, Aisha, see, we never, we have one rule: we should never fight the government in investing. And I think government is trying to maximize its tax revenue out of these gaming companies. It's an evolving thing because gaming itself is not a very, very old sector in India. So I think somewhere in the next 12, 18 months, there will be some negotiations and some common ground that will be reached. I think that is a time I look at it. It's no point jumping into a sector where government is coming out with one or the other notifications every 3 months. While, as I said, we are very bullish on gaming as a sector because Indians really have a large appetite for low cost entertainment, be it, playing rummy online, or be it watching IPL, or betting on cricket, or be it option trading. We have seen that, Indians really like this particular thing. So we are very bullish on the long-term story. But I think there is no point fighting the government. Let the regulations get clear. Let the whole GST rules around this gaming, let there be more clarity, and then one can revisit, because these are very, very long-term stories otherwise.
Okay, Digant, great to have you in the show. Thanks as always for taking the time out and joining in. Let's just revisit what the GIFT Nifty is indicating. Mildly soft, that's what the implied open is currently at. So let's see which way we head. But Nuvama Wealth, formerly known as Edelweiss Securities, is going to be listing on the bourses. Let me take it across to Sharad and find out what to expect from this one.
Well, yes, in focus we are having Nuvama Wealth, and the company is expected to be listed tomorrow, which is September 26. And importantly, on 2nd June, the company was demerged from Edelweiss Financial Services. Now, important thing is we have done a peer analysis where we have actually come across the market cap is expected to come at roughly 8,721 crore rupees for the company on the listing based on the peer valuations and the averages we have taken. For FY24, if you look at the peers, Anand Rathi is trading at 31 times its 12-month forward P of for FY24, and for Eiffel Wealth 361 also it's trading at 23 times. Now, importantly, post demerger, the shareholding PAG, which is the private equity fund, will have roughly 56% stake. Edelweiss will have 14%, and the shareholders of Edelweiss, they will be having roughly 30% stake. Now, apart from this also, if you look at the wealth management, the peer analysis, over here Nuvama Wealth is having assets of roughly 2.5 lakh crore rupees, while IFL Wealth is coming close second with almost 2.2 lakh crores. Also, if you look at the clients, roughly 11 lakh clients are there in Nuvama, and in terms of families, in Anand Rathi, it stands at roughly 8,352 families. Also, importantly, what lies ahead for Edelweiss, that is what the street is also seeing over here. They are expecting to continuously hold the portfolio of 7 businesses going ahead, and the demerger move will also unlock value for the shareholders. Now, also it has been seen providing capital for the Edelweiss Financial Services arm for the future investments, and at a group level, the levels will also come down.
All right, thanks very much, Sharad, for giving us those details. In the meantime, let's also get in a take then on the charts. Given that a lot of the heavyweight IT names as well buckled under pressure, Naresh, how are you reading the charts of the likes of an Infosys, Wipro, HCL Tech and TCS?
So what we are seeing is in terms of the large caps, the momentum has not been great. Infosys continues to be in a downtrend. The stock was the stock which corrected most, made a bottom in April, closer to 1200, has made a meaningful recovery from those levels towards 1500. But the chart is still not promising. TCS is the one which is still promising because the stock has made a strong base around 3000, 3200 and is now testing that breakout at 3550 to 3600 mark, which was the high for the last almost 12 to 18 months. So TCS on dips to 3400, 3450 would be a buy. And overall could be slowly and steadily a recovery stock. More interesting names is something like HCL Tech, which has clearly shown a relative strength. The previous all-time high for the stock was closer to 1350, 1380, and the stock is now at 1280. Breakout was at 1200, so dips to 1200, 1230 would be a buying opportunity for the stock, and even at current levels looks the most promising in the large cap IT space. Overall, going forward over the next 2-3 weeks, we'll see a lot of results, and that could be a risk factor because a lot of mid cap and small cap IT names have moved up quite a bit. So any negative surprises, we could see gap downs in some of the names. So one has to be careful in the mid cap, small cap IT names.
Let's revisit PSU banks and a strategy there. Naresh, what's the strategy for traders, and especially day traders, if they want to chance their arm into smaller PSU banks?
I think the best thing to do is nothing in the smaller PSU names because what generally happens after such a speculative move is the corrections are really sharp. So if we go back to last year, we saw a move from say 18 levels on IOB, it went up to 36 in less than 2 months, and then it went back almost to 22 levels. Now, recently, the stock has moved up from 23, 25 to almost 48. we may stay here for some time, but eventually it could go towards the 35, 38 mark at least. So not worth taking the risk, but at the same time, there are, say, larger banks in the space which still look interesting. So Union Bank of India has given a bigger breakout. The stock was at 95 in the previous move. The stock has broken out about 95 and now closer to 9,500. This is a stock which looks interesting. So there is space. So earlier the favorite was PNB, which has already moved up. So now one could look at Union Bank of India and the smaller names, which looks interesting. And there is an Indian bank which has been the best performing PSU name. The stock has now crossed 2018 highs as well and is at an all-time high, which is a rarity for a smaller PSU name. But overall, the view is to look at Union Bank of India, Indian Bank, rather than a IOB or a UCO Bank.
Kunal, consumer names have come back, especially Tata Consumer, Varun Beverages. Is there trade there now ahead of Diwali?
Yeah, I think very specific pockets, Nikunj, not all of the FMCG stocks, because I think most of the likes of, for example, the traditional names like HUL, Britannia, etc., there is no major breakout, for these stocks. Yes, these stocks, they topped out, I think, the month of June, much prior to the markets initially topping out. And then these stocks, I think, have on an average have corrected 15 to 20%. So what we will probably expect is that if the markets are getting into a risk-off phase, there could be some parking of money or funds into these defensive pockets. And I'm talking about the traditional ones. But yes, Tata Consumers, out of the names which you mentioned, I think that looks very attractive. The stock has confirmed a breakout, I think a couple of months back in the month of August, first week, breaking past about the 800, 820 here, and now it's already confirmed a breakout over the 900 levels. So I think that's a stock which I would be looking to trade on the possibly in terms of the breakouts. Would expect this momentum to continue for Tata Consumers and a potential target range in the range of 950 to 980, even from a short-term trading play.
All right, let's get a move on then and check in as to what exactly the pre-open rates indicate. 170 points higher on the Sensex and for the Nifty as well, holding out in the green around the 19,700 mark. Would be interesting to garner some mid-cap trading calls from our charters. What is it that they're picking out for the day, Naresh?
So that would be a buy on Federal Bank, the only small cap private banking name which has been clearly showing leadership. The stock is at a new all-time high. And consolidating around that 145, 148 mark, making a classical flag formation here. Would expect it to break out and make a move towards 170, a stop loss to be placed at 140.
Right, let's find out what Kunal as well is picking out. Kunal?
So granules is something which I would look to recommend at current levels, because the stock is forming a bullish flag pattern on the daily charts. It's confirmed a swing breakdown. Even the last 4 or 5 days, the stock has been holding this level of 330, 335 broadly. So that's an important pivot of support for granules. Would suggest a buy with 355 as a target. Stop loss at 323.
All right, there you have it. That's a sell on granules. But let's move right on then and tell you about some of the other top headlines that we're tracking. And a shutdown looms as the US struggles to pass the funding bill. The government funding is set to expire on the 1st of October, leading to a disruption of federal services and workers being furloughed. Meantime, as diplomatic tensions escalate, Canada has issued an updated travel advisory for citizens of India, urging them to remain vigilant and exercise caution. This, remember, is the second time that Canada has updated its travel advisory in just 5 days. The Indian visa services have been temporarily suspended by Canada. Meantime, the Reserve Bank has imposed a fine on SBI and 2 other banks over violation of rules. They have been fined 1.3 crore rupees, that's SBI, while Indian Bank, Punjab and Sindh Bank fines go over 1 crore of rupees. Now, these penalties were imposed for various reasons, including issues related to due diligence on loan disbursements. Meantime, the tiger deaths in Tamil Nadu's Nilgiris has raised concerns. 10 tigers, including 6 tiger cubs, have died in the last 40 days. That's from the officials of the National Tiger Commission team, who have said, and they have visited the district in order to actually investigate this matter. And meantime, Indians took to the internet by storm after Elon Musk posted a video of a humanoid robot doing Namaste. Musk also shared the video of this humanoid named Optimus doing some tasks, adding that it was capable of calibrating its arms and legs. And the world of sport has lots of headlines as well. India's gold haul at the Asian Games continues. The women's cricket team has clinched their maiden gold at the Asian Games after beating Sri Lanka by 19 runs. Additionally, India's air rifle team has also won gold at the 10 a.m. air rifle shooting event and set a world record by scoring 1893 points.
Get all the cover. Now let's go to Sharad.
Well, yes, in focus we are having JK Paper, and what sources have been telling to ET now is that the company will be taking price hike across all the products, and this is coming in from September 30th. Now, importantly, this price hike has been taken because of the upward movement seen in the pulp prices as well as the wood prices. Over the last 2 months itself, more than 10% rise has been seen. And also importantly, there are two important aspects to it. The first one is, of course, the CPM unit, which is the packaging board, where all the products are expected to increase their prices by almost 2,500 to 3,000 rupees per metric ton. And for SPM unit, there is a price hike of almost 3,000 per ton. Now, there was no reply was coming in from the management as per the mailed inquiries sent by ET now as well. And overall, if you look at the paper stocks itself, the demand coming in for the packaging segment, especially on a pre-festive season buy, has also been very strong.
All right, thanks very much. Watch out for JK Paper in trade today. But meantime, let's also put the spotlight then on the editor's radar. Reliance Industries has been an underperformer. But what is the editor's view? Let's hear it out from Nikunj as to what the implication of a turnaround in this stock could mean for the index.
Everybody's talking about that underperformance in Reliance, but I beg to differ. I say that, okay, you're looking at the underperformance in Reliance, but then you go to add back the value of Jio Financial Services. That's a good need 250 rupees. Yeah. So you add that 250 rupees, then the picture for Reliance is different. So that's one point. Second, yes, if you look at Reliance in isolation, which is what you need to do, it has not really participated. And B, in the near term, I've always seen with Reliance, and since there is so much of rich history available for Reliance, that when the company has always announced a large capex, the stock tends to underperform. And last AGM, they announced a large capex, and another 2 years that capex will start. So that, in a sense, has really been a factor why Reliance historically has underperformed. So the way Reliance has historically moved, that will give you 2-3 years of underperformance and then one or 2 years of big move. So I think it is just getting ready for a big move. Now, whether that happens this year or next year, that's conjecture. But I think that's how typically Reliance has moved. Also, in terms of the fundamental factors, well, GRMs are not that strong. The global demand is not that interesting for the OTC segment. So there are other fundamental factors also which are at play. But for markets to move higher, I guess Reliance has to move higher. The more Reliance will consolidate, the cheaper it will get. I guess this is one heavyweight which in fact can really do the trick. Just think about it. You get HDFC Bank back up and Reliance back up, the Nifty could be very different. Absolutely. But the problem is between Reliance and HDFC Bank, it's a good 16-17% index. Actually more. HDFC Limited and Reliance is much more because the combined entity is much more. It's north of 20. If they both come down, it will have an impact on the market. And if they both flip, we are looking at an upside. So a lot actually hinges on these two stocks which will determine the near-term direction.
All right, that's an interesting take coming in on Reliance Industries. But what exactly are the index calls? Remember, it is expiry week. Here's what our chartists are saying. So basically, keep it safe. No trade from both Kunal and Naresh. A hold call from Kush Bora. That's the view on the Nifty index this morning. And ditto when it comes to the Nifty Bank, continuing to maintain a no trade stance.
Naresh, how long do you think Nifty will continue in this no trade zone?
So till the time we don't get beyond this range or make a strong reversal, it could be at least a week or two. That's the expectation as of now. We find a range first. We've not yet found the range. We've not given a reversal signal as yet in the drift lower. So once we find the range, then we get into a range for a week or two, and then we get a new trend. So for now, the expectation is at least a week or two. We do not break that 19,300 mark, which was the bottom roughly 19,250, 19,300. and neither the 20,000 mark. So that's a long enough range as of now, but we should find a range over the next couple of sessions at least once we start getting a reversal.
Look at the components of the Nifty. Reliance is underperforming, HDFC Bank is underperforming. So if I add only Reliance, ITC and banks, that's about 50%. 50% of the index is not going anywhere. So in terms of the direction, do you think the path of least resistance is on the downside rather than on the upside?
So I would say I would wait it out because the cases, the two heavyweights which we look at, Reliance and HDFC Bank, they're not seeing breakdowns. They're just seeing a slow drift. So HDFC Bank was at 1500, 1530 in March. We are going there. If we start breaking below 1500 with a big downtick, then maybe there is a downtrend. Same way, it's been a slow drift on the on Reliance as well. Even in names like ICICI Bank, which is the next big weight, it has just drifted between 940 to 1000 for the last many weeks. So the fact is, the two heavyweights continue to drift lower, and rest of the names just go sideways. So we've seen a Kotak Mahindra Bank flip between 1700, 1800. You could pick up a SBI, it flips, goes to 610 levels, goes back to 570. So we are just flipping between a 3-4% range for most of the names, and a slow drift on the two heavyweights. So till the time we don't see a clear breakdown and a breakout, we could stay in this range. So not expecting a sharper cut or a sharper rally as of now.
Well, the path of least resistance, down or up?
Down.
Down. Why do you say that?
See, because we flagged off one of the data that there's been a sharp reduction in open interest for the Bank Nifty right from the start of the September series, which means closer to the top, maybe at 46,000 odd levels, we were just about at 13 lakh contracts, which is significantly lower than an average of 18 lakh to 20 lakh contracts which we trade on the Bank Nifty. This would also have a resultant difference to the expiry because we are at the expiry week. So that will also have an effect on the rollovers for the next series for the Bank Nifty. The other way to look is that the Nifty is now very close towards the support of the 50-day moving average. Bank Nifty is retesting 100-day moving average. So now both the indices have already shown signs of weakness. Bank Nifty, of course, has shown more weakness as compared to the Nifty. So that indicates that the selling is not over. Even on a day like yesterday, where we managed to make a flattish close, we failed to give a breakout of the previous day's swing high. So all of these points indicate that the markets are not ready for a strong kind of a bounce. Either they would go through a time-wise correction, or the higher probability is that we would go through a drift on the downside and retest the previous lows that was in the month of August.
Okay, fair enough. The currency as well, and that weakness continues versus the dollar. Of course, we've been talking about the resilience in the dollar index, but 83.22. And Kunal, what are the charts reading when it comes to the rupee?
I think it looks to be more on the weaker side because we were indicating that below the 83 levels, we could be looking at 83.5 as a next benchmark level for the rupee to trade. I think more importantly is the dollar index, because the dollar index has given a breakout about that 105 mark. 106 levels also have been broken. So it's almost at a 10-month, 11-month swing high for dollar index, and that's also showing signs of strength or a breakout for itself. That could probably aggravate the concern in terms of rupee over the very near term.
Bunch of stocks which are going to be in focus today. Remember, there was that Moody's upgrade as well coming in for Tata Steel just last evening. They've upgraded it to now an investment grade of BA3 or rather Baa3, and the outlook has been posted as stable. Tata Steel in the pre-open rates itself holding out 1.6% as we speak. Wipro, they've sold a building of about a 14-acre plot in in Chennai. So look out for that as well. Strides, we've been highlighting this stock up you. So it was a 7.5% bump up that you had on the stock yesterday, and today as well you're seeing a follow through of about 0.5% coming in. They're expecting Stellis to add about $5 to $6 million of EBITDA in FY25, and the margin guidance is standing at 30%. So that's another stock which is in focus. This Fortis as well, very small acquisition, Artistry Properties, 32 odd crore rupees, but maybe a bigger jump up on the stock, holding up about 1.5% as we speak. So these are a couple of stocks which are in focus. There's Sheela Foams as well. There's a QIP which has been announced, so look out for that. There's also GR Infra 2. The National Highways Logistic Management has won the bid. The projects are about 3,600 odd crore rupees. So that's going to be another stock which is going to be in focus this morning. But that said, for the index, Nikunj, it's pretty much status quo. No go yesterday, no go right now as well in the pre-open rates.
Yeah, which frankly is not bad. I mean, as long as you're consolidating with no large casualty here or there, you bounce around, support levels and try and identify a range. I don't think anyone's going to complain. Look, we've had a one-sided move in the market. And that one-sided move needs to be digested, given that we are now moving from a lull of news flow, which is the September month, to a patch of heavy news flow, festival season trends, earnings season. A lot would be thrown at the market in next 2 or 3 weeks, unlike last 2 or 3 weeks where we've had a just little bit of macro indicators here and there. So 10 seconds to go first rates. I don't think anybody expecting anything much, but that's the way it is. I don't think there is a reason to complain in terms of the market setup. First rates, I'll just use my screen to get the trends, and there you go. The first rates will just start trickling in. They're just trickling in on the bank Nifty, they're just trickling in on the Nifty, and it's a flat start with actually a very strong market breadth opening in favor of the advance versus decline ratio. Some stocks which are popping right up in terms of volumes. First, I want to mark IRB Infra, which is up 2%. Then you got Delta down another, Delta is down another for 2.5%, 4% actually now. Then you've got Central Bank of India, UCO Bank, Union Bank, all of them are just not going anywhere in terms of a trend. In terms of the value of the transaction, where the stock transaction is there, there's a blocked in volt-time transformer. I can see it on my screen. The volumes in Delta Corp are unusually high for the market cap it represents, and Bajaj Finance a one-day wonder because the gains are getting challenged. Tata Steel, bit of a news at play, but the stock I think is also trending up smartly given where steel prices have moved off.
Remember, Ashish Kacholia had sold about 15 lakh shares in the block deal yesterday in Delta Corp, and today too you're seeing some follow-through sell-off coming in there. Strides, that's got to be the one big stock to look out for. DAM Capital has come out also now with a note saying that Stride shareholders are getting the one-source business effectively for free, though you're not seeing a follow-through coming in on Strides Pharma. Tata Steel after the Moody's upgrade, let's check in on that stock. Eicher Motors, we flagged up this one up for you. Jefferies maintains a buy. They've hiked the target price to 41.50, and they don't believe that, at least by their channel checks, that competition is any problem. For that matter, they've enlisted some tailwinds for Eicher, 2.25% higher for Eicher Motors as we speak. And Century Textiles, which has launched a project in Bangalore with about a 3,000 crore rupee revenue potential. So Century Textiles is the other stock in focus. It's a 4.25% bump up that you're seeing on Century as we speak right now. We were talking about GR Infra. National Highways Logistics Management, remember, has annulled the bid that they won for 2 projects, which equates to 3,600 crore rupees. So that stock, of course, is tanking down. Sheela Foam, there is a QIP, Voltam, reports indicating that the promoter may be selling 12 shares in a block. So look out for what that stock as well does in trade. And then, of course, there are a couple of others like a Wipro as well after the land sale deal. So let's see what that stock is up to too. Absolutely flat for Wipro as we speak right now. What's the action on MCX, and what about Bajaj Finance and Trent, considering these were the other high flyers yesterday? MCX still on the go, 2% higher additionally to that big move on the stock of 6.5% yesterday. Bajaj Finance marginally higher, and Trent and Balrampur Chini are the other stocks that will just come up for you on your screens next. Trent marginally higher again after that 4% bump up yesterday, and then Bajaj Finance and Balrampur Chini, which is down about 1% as we speak. Kunal, what are the first trades you're executing?
Aisha, that would be on MCX. That looks very attractive. So after yesterday's move, the stock breaking past about the 1900 levels, closing about the 1900 mark, and today also the stock showing signs of a good follow through. So that's a clear-cut sign of a breakout for MCX, and that's a stock which I looked at in the open.
All right, MCX it is. That was his bet this morning as well. Let's find out what exactly Naresh as well is picking out for the day. Naresh, going by the kind of flattish open that the markets have thrown up this morning, what is it that you're punching in?
So continue like Federal Bank would be looking to add on dips closer to 146 or say in momentum about 149.